Good morning, everyone, and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin, and I'm here with my father, Carl Swenlin from DecisionPoint.com. And we are going to discuss what's going on in the market. We will also look at the sectors and some industry groups. And then at the end, we're going to take your symbol requests. So if the first thing you could do is recognize that the Q&A box is for your symbol requests and questions. We really like to get those questions answered, so definitely put the questions in there. We probably won't get to all of the symbol requests, but we'll do our very best. And then the chat box is for you to talk amongst yourselves. Just make sure if you go in the chat box and send a comment that you do use the drop-down menu above the comment to send it to everyone. Otherwise, I'll just get it, Carl just get it, and we're not going to be looking at the chat box. So Q&A box if you want to talk to us, chat room if you want to talk to each other. All right, I think that covers all of our housekeeping. We are not registered investment advisors, so all trading decisions are your own. Nothing that you hear in this trading room or read in our blog should ever be considered a call to action. We're just giving you our read on what the charts are saying and giving you insight into how to read those charts. Okay, Dad, now you can take it away.
Okay, and also if you're having trouble seeing the focus properly, try another browser. That can be a problem. All right, last week we talked about a long-term chart of gold, and we got a question from one of our viewers asking to look at silver. So and all this many years I've been looking at this parabolic advance here back in the 70s up into 1980 as being something that was gold centric. And I totally found out that wasn't the case. Here is silver. Silver had a huge up spike there because of the Hunt brothers cornering the silver market. You notice that this top in 2011 is almost high, a little bit higher than this, but pretty much you could call them equal tops. But what we have here is basically the Hunt brothers not only blew up the silver market, they also blew up precious metals in general because it affected gold, and it also, I looked at platinum. We have one; it's got a similar spike in that area. So I don't know of any other comments to make, but after all these years, I suddenly realized it was the Hunt brothers that caused this spike in gold and not just something going on in the gold market itself. Okay, let me go to, no, I want to go to the SPY first. Looking at the market right now, we're still going down, and I don't, we may get a bounce, but we got a downside initiation climax on Friday. So I don't think we're going to see any new highs here. I don't think this high will be taken out before this low is taken out. I think that's what's going to happen next. Just my look into the crystal ball. Looking at our indicators, I can't emphasize enough how useful new highs and new lows charts are, because they really do show divergences at the right time. Here, most recently, we had this price top and this high and new highs. And then here we had another price top, which actually exceeded this one, but that was intraday. And really, this should have at least equaled or maybe even done better, but it fell well short of that top. So the negative divergences on these charts, positive divergences as well, are really a useful signal. Let's look at our indicators. Here is the short-term indicators, the Swenlin trading oscillator for breadth and volume, and they are kind of converging into nothing here at the present, but the notice negative divergences on these. And it happens a lot. Positive divergences here, announcing the next advance. Here's our intermediate term breadth momentum, and volume momentum indicators. They basically have topped out, and we would expect them to get, they were overbought here. We expect them to get oversold down in this direction before the next rally starts. Notice we have, this is a PMO crossover buy signals. That's when the PMO crosses over its signal line, and that's a buy signal. That's the percentage of PMO buy signals in the S&P 500, and this is as of Friday. This is an end of day indicator. So you can see where those buy signals were trailing off before this price top. Here they are together. It's nice to see the interaction with the short term moving much more rapidly and frequently as opposed to the ITBM. And basically, when you see right here, you see a top in the ITVM intermediate term, and they're preceded by tops in the short-term indicators. Okay, let's go to our what we call the four, starting with the dollar. Notice the dollar is off a little bit right now, and with that, gold should be advancing, but it's not. Gold is also off a little bit. So gold is intrinsically weak today. Crude oil, trying to get a rally going. We've got a top above a top, I'm sorry, a bottom above a bottom, and we're waiting for another top above this top to be at a point where we could declare it's a new rising trend in the short term. Let me look at the 1 year chart. It really looking like a major rollover here. It's unintuitive, but it's that's what's happening. Bonds, this is the 20-year Treasury bond ETF, and we had a parabolic advance. You notice we had ever increasing rising trend lines, ever increasing angles. And it broke through over here and looked like it might have been going to be setting up a flag, bullish flag, but today it's broken down. So we've got a top here, and this is probably going lower. PMO is topped. And yeah, I think we're finally getting a result that we expected on that. Bitcoin had a bad drop on Friday. Notice we get this trades during the weekend as well. So you can see Saturday, Sunday, and now today it's moving, basically moving sideways from this breakdown. The likely outcome is negative. Got this huge top rolling over, and I just think we're going to see it down here in this 5,000 area one of these days, not too far away. What happened there?
No.
Okay, here's the 10-year Treasury yield, and notice we have a declining tops line, and it is bottom below it. It's got three bottoms, and then it's finally broken out above this declining tops line. And notice the PMO is turned up today. It turned up week before last, and it's doing it again. But we're in a oversold area here at minus 2.5%. I'm sorry, minus 2.5%. Here's our yield array for the bonds and bills. We have an inversion on the yield curve. Notice this is the 1 year up here. This is the 30-year down here. Which is completely backwards. I do believe we're going to be bottoming right in here. We've kind of like a cycle, a pullback, each one getting more severe. But I think we finally gotten over the decline, and I think they're going to go up again. Here's an interesting thing on the financial sector. Erin is going to cover the sectors later. But this one, we notice we just got a long-term golden cross buy signal earlier this month. And we're getting to the point with the price below those moving averages, we're going to get a downside crossover within much closer than our long-term. And that'll be a death cross buy sell signal. Big tech, not doing well. Apple was down almost 2% earlier today, but it's still down 1.5%. Amazon is challenging this line of support here. It's down 55% from its all-time high, and it doesn't look like it's ready to recover. Google did rally nicely, but it's moving back down and presumably to retest this support line. Native platforms down almost 3% today. You can hardly see it on the chart. That's because it's down over 77% from the all-time high. Microsoft also moving down. PMO is topped, and we have a downside crossover of the PMO. Netflix had a nice rally, and now it is retreating. And I'm guessing it's going to retest this low. NVIDIA, I would say typical of semiconductors, and it's also retreating from its most recent high. PMO crossover. Tesla, I keep moving this line of support downward. It's down 64% from its all-time high, and probably going to go much lower than that. It's got a PE of 45, which is way overvalued, but improved from what it was back here, though.
Yeah.
Okay, today we're going to get a dark cross sell signal on the NASDAQ 100 QQQ. And we've got the PMO crossed over last week and still headed lower. And I do believe I've run the course.
Okay, feel free to break in, but as you were going through most of these charts and talking about right now the QQQ, I think it's really a good idea to show everybody our golden and silver cross chart list. Just a quick review, because there are a lot of things going on. And on Friday, the QQQ saw a negative crossover on our silver cross index. So I wanted to show you that. I'm going to do this through our chart lists on our website, mainly because I'm having difficulty with us transferring chart lists, and StockCharts is working on fixing that right now. But this is for our members only. This is our blogs and links page. And I do want to remind everybody that our prices will be going up substantially in January. All of you current subscribers are fine. You're going to get to keep your rates, which is why I encourage those of you who do not have a subscription to go ahead and subscribe now before January when we raise our rates. I don't have the exact numbers, but the rate for our bundle is going to be going up to $119 per month from $68. So it's going to be quite a jump there. And we recommend that you go in and subscribe now at our much lower prices here for the DP Alert and DP Diamonds. But let's go back to what we were going to look at. So over here for our members, members of DP Alert, DP Diamonds, you get access to these chart lists. And I want to go over our golden and silver cross chart list. And I'm going to bring you in particular to looking at this particular window on all of these charts. And what you'll notice is that silver cross index being overbought, and for many of them now just starting to receive those negative crossovers on the silver cross. So the SPY has done that now. That happened, I believe, on Friday. This is the mid caps. You can see they had their negative cross a long time ago and are continuing lower out of overbought territory. Same for small caps, already had that negative crossover, continuing lower. Here is the NASDAQ composite. We use ONEQ, and you can see it's just now had a negative crossover on its silver cross. Here is the NYSE, new downside crossover on the silver cross. The diamond, this is the industrials, DIA, and you can see that we got that negative crossover there as well. This is going to look a little bit jagged because of the fact we only have 30 stocks there. Transports, also negative crossover and overbought territory. QQQ, this happened, like I said, last Friday, Thursday. We've got the negative crossover there. OEX, same. We have it now happening for gold miners here, so that's another problem. Oops, I didn't want to go to last. I want to go to 2. Here is the comm services. You could see negative crossover. I mean, it's basically, I could go through all of these. We're going to look at some sectors, but just notice that those silver cross indexes are all coming out of overbought territory, and many of them are on downside crossovers of their signal lines. It's not a pretty picture. So let's go ahead. We're going to move into the sectors, and this is the sector candle glance from StockCharts.com. You'll notice that the S&P is up here in the corner, so don't get that confused with the other sectors. But again, more overbought conditions and PMO downside crossovers. At this point, energy has been really suffering here. It's still got that big rounded top. I am still negative on energy. I do have a reverse ETF that I've been trading, which is ERY. But we do look like we're getting a little bit of a double bottom here on XLE. So the inverse ETF might be a little bit concerning here, but at the same time, you can see that PMO moving below the zero line here. The scooter, though, has shot up. So we do need to be very careful here. It could be that we're going to see the correction on most of these other sectors, and then energy will make a little bit of a comeback, if you will, but so far not looking like it's ready to do so. And again, overbought PMOs on sell signals. So when I was trying to do the sector to watch last Friday for my DecisionPoint Diamond subscribers, it certainly was tricky, considering that we have so few sectors here that look healthy, if you will. And I think ultimately I ended up going with utilities, because they are, while they are declining here, they're getting ready to hit some pretty important support at the 50 and 200. And this has been kind of the only sector that's been showing any, real movement here as far as having a rising trend that's been fairly intact. But that does look like it's getting compromised here. We do have a hollow red candlestick, though. These are actually bullish patterns. They're similar to they're the opposite basically of a filled black candlestick, which is bearish. It tells you that currently, while price is lower on the day from the day before, we are trading above the open. So it could be that we're starting to see that move back to the upside, at least here for utilities. But overall, I mean, if you go into those chart lists, and if we look at our sector chart list, we can see, again, some big problems. Comm services losing support, Silver Cross looking ugly, but I showed you all of those. Notice participation is just really thin. Only 8% have price above their 20-day EMA. Stochastics in decline, and obviously seeing less relative strength. The sector, the consumer discretionary, is now testing some important support. But notice its PMO topped beneath the zero line. So overall, this is a very weak sector, just knowing that about momentum. So I would expect to see a breakdown here. And again, relative strength fading. Consumer staples, we are getting a bit of a bounce here off the 50-day EMA and off support at this top here back in May, and the top back here in September. A top back here in November. So it's a fairly strong level of support. So we could see a nice bounce here on consumer staples. It is a defensive sector, and it has been showing some relative strength, but notice stochastics. I mean, nothing
Erin,
here really.
Erin, you notice that I put vertical dotted lines, red dotted lines on all the sector charts this weekend. They all seem to have topped, and that's what I do. When the red dotted line, it means top, and green dotted means a bottom. So you can.
Yes, that's good, because we often get questions, what do those vertical lines mean? And right. This is something I don't see other people doing, Dan.
Right. They're not predictive per se, but they're, when I think it's topped, and you have a technical sign like a breakdown like you do on this what's this
consumer staples.
Right. And so that's what that is. And then we use that line to compare to see if there were any divergences on our indicators. And you can see how, the 20 stocks above the 20 and 50 were trailing off and, moving down prior to the price top.
Yes. So by marking these tops and bottoms on our chart, we have a much better way to visualize those positive and negative divergences, which really positive and negative divergences are one of the most valuable indicators that you can have when you're looking at a chart, because they do tend to come true. So Energy, as I said, maybe trying to make a move here. We don't have a double bottom, but possibly we're going to see that start appearing. The PMO is now below its signal line. You can see stochastics have turned down in negative territory, but at the same time, XLE is showing relative strength against the market. But this is a great example. Just because a stock ETF is showing relative strength against the SPY, it does not mean that it's been going up during that time. And you can see that when the relative performance started to increase, we did end up, it was right about here. And you can see that price is really about the same as it was when that occurred. We talked about financials already having a problem, and that the loss of the golden cross and going into that sell signal death cross. And again, it's starting to outperform, but do you really trust it? You know, when we're seeing this kind of devastation to participation, it's hard to imagine that this is really an improving sector. Healthcare broke out of its bearish rising wedge as expected and continues lower. It is about to test the 50-day EMA as support, but we can see an overbought PMO sell signal. Notice the negative crossover on the silver cross index. That has just been, these signals are really, really right on. I mean, you can just look in the past with the positive crossover coming almost exactly at that bottom. You can see the negative crossover occurred a little bit later here on that top, but ultimately the negative crossover did end up predicting, if you will, the decline. So this is a really powerful indicator. And when we see a negative crossover on that indicator, that is a huge warning flag. All right, here is XLI industrials looking pretty good here. Except for the fact we have that silver cross negative crossover. We do have that PMO or that price bouncing off the 50, but ultimately we're still looking at some problems here on XLI, but definitely an increase in outperformance going on here. I'd certainly like to see stochastics turning up at the very least before I would consider this sector. Materials also having some issues, but hitting some very important strong support right here at about 77.50. Currently, we did see a little bounce, but it is down today, and we could see that breakdown occurring today or tomorrow. I'm sure gold being lower isn't helping XLB here, but there are a lot of other, there's a lot more to materials than just gold. So obviously not all of them doing well, and you can see the declining trend in overhead or in relative performance. Breakdown here on real estate. I've actually been watching this one very closely with mortgage rates pulling back. I thought, you know, maybe we might get some action out of this sector, but no deal there. We have no stocks in the real estate sector with price above their 20. I mean, that's about as bad as it can get. If you're thinking that, oh, it's down here and that means that this is a good buy point because, you know, we're going to see the reversal from 0%. Yeah, you might, but notice that those oversold conditions, when things are going bad, can persist. So counting on this indicator to make the turn would not be wise.
You just keep in mind when price gets below the 20 EMA, that's, you know, an event, but then price can keep going lower and lower below the 20 or the 50 or the 200. So it doesn't really help us in that regard because it's a finite range.
Exactly. And then finally, let's look at technology in a declining trend. I did read a headline that, you know, Kathy Wood's, you know, ARK fund, ARKK, was down about 65% so far this year, but she had well over $1.5 billion flow into her fund. So we don't want to be blind here to the problems that are going on. But apparently there's quite the trust factor as far as Cathie Woods goes. We do have kind of a cup here with a little bit of a handle forming, but again, underneath the surface, we see that technology is suffering just as much as the others. It played around here, that silver cross, with trying to make the turn, but ultimately it's moving lower on a negative crossover. Again, very bad to see. And finally, we'll look at utilities. Rising wedge, drop below them, but sitting on very strong support. Like I said, I mean, this is a sector to keep an eye on, this, and I would say consumer staples and healthcare, just because they're in that defensive area of the market. But healthcare has been outperforming, and even though it had this big decline, it still was outperforming. So again, outperformance isn't the be-all, end-all when you're looking at what's going on. It simply didn't go down as far as the S&P did last week, and that's why it's showing strong relative performance, really, if you look at that.
But it did break down from the rising wedge, and you notice that the 50 and 200 EMAs are very close together. They're safe now because price is still above them, but there's not much distance to go to turn that around. So this one is, got a PMO top.
Yeah, I mean, there's nothing good out here as far as the sectors. I would love to have been able to come in here and say, oh, we have this pocket of strength, but we really don't. And that brings me right into looking at the industry group summary. And, I was really trying to find an area where we were seeing some positive, momentum, etc. But you can see when you just flip through these, if we had these all in a candle glance, which unfortunately I cannot do at this point, but if we did have them all in a candle glance, you would see that there really isn't any area where the PMO is looking halfway decent, like even halfway decent. Kind of rising here on home construction. That was a sector, an industry group that I felt that we should watch, but I heard that we're having some problems in home construction. It was a headline today. So I don't know how long that will be able to, you'll be able to get anything out of that. But that was one of the only ones when I was going through looking for an industry group to watch that had a PMO that looked halfway decent, but it's really overbought, that PMO. And it does look like it's topping. So just really not a lot of strength to look at out there. And if any of you have any, ETFs that maybe mirror some of these groups that you think look good, I'd love to take a peek at them during our quotes, our symbol requests. Oh, this isn't changing like it's supposed to. Don't want to look at the same charts over and over. Here is energy. And again, if you're going to see this group turn around, this sector turn around, you need to see at least a rising PMO somewhere. And we don't have that. So energy may look like it might make a turn, but I don't see anything when I look in these industry groups to tell me that there's strong movement to the upside, not even in one of those groups. So financials, we saw we're getting close to a death cross. Again, I'm just flipping through these because, really when you're looking for where to go and finding those pockets of strength, the first thing you want is positive momentum. And do we have it anywhere? Oh, I'm going too fast. It doesn't like it.
Yeah, the big problem, one of the big problems is indexing, because when you buy an S&P 500 fund, it's or ETF, it's just they have to buy all the stocks in the index, and it's just
yeah, whether they like them or not.
Yeah, demand or the reverse. It's you just have everything going the same way.
It is.
rising tide raises all boats. Well, it raises most boats, and a falling tide, the boats fall with the falling tide, and it's pretty much the way it goes.
Yeah, I mean, I've continued to flip through these, and I have yet to find positive momentum. The last time this happened, it was during that decline back here, right before we had the big move to the downside. And I remember yelling I wrote a bunch of articles, tweeted, where's the positive momentum? We still don't have any. How are you going to pull yourself out of a big decline if you don't have any leadership? None. I mean, zero.
Yeah.
None of these had positive momentum. So I would love to dive into a group and say, let's go find some stocks. But honestly, I don't see any group giving me any high sign to go fishing into them, which means in the big picture, there's no good reason for me to expand my exposure. There's nothing that's out there. If there is stuff, I mean, there are things that are out there going up, obviously. I mean, you can look at our, the dashboard on StockCharts. I mean, there's obviously some stocks moving higher, but trying to pick those out of an ocean of stocks that are moving lower is just, needle in a haystack, whatever, euphemism you want to use. It's just not a wise thing. And for those of you subscribers, I do tell them what my exposure to the market is. And of course, I always disclose if I own something that I talk about. But right now, my exposure is at 12%. And honestly, I was at 10, and I'm already regretting adding that extra 2% with a 5% hedge.
Okay,
I shouldn't have done it.
Move on to some questions.
Yes.
First question is, what kind of a car did you buy? So is the chip shortage over?
I ended up buying a Subaru Outback, and apparently the chips are in short supply. It took us about 3 months before we got the car that we had ordered and wanted, and it's full of computers. It's, 5 cameras. The thing's crazy. I don't even know how to drive it yet. But yes, the chip shortage, I don't believe is over just yet, but I have heard there are American, overseas. Taiwan is building a big semiconductor plant in Arizona. So maybe that is going to clear things up a little bit.
It's not a great time to be buying a car, but
when you have to.
The car was pretty well in the ditch.
I was driving an 08 Santa Fe, so it was kind of time for me to go ahead. And I'm not a big car person. If it drives, it drives. So that's what I need. But eventually one day I'll get my Porsche. We'll see.
What is the best pattern you use for shorting? Is it too late to short right now?
The best pattern to me is, those double and triple tops. Those are probably my favorite patterns. They really tend to, give us a great picture of when to short. Let's just pick Apple, even though this wouldn't be my favorite shorting candidate right now. But you can see the rounded top. You can see this support level. It's now been broken. Do not mistake this blue line for support. This is just the moving average for volume. So it is not a support level, but we do have some support here. So what I'm looking for are these rounded tops. I'm looking for, let's see, what can we pull up? Let's just look at somebody's request here. If there are any that are on the short side. I don't see any right now, but let's pull up EWZ. It's our first symbol request. Still not a good example, but you do see this very strong support level here. Notice that, and it did lose it, but it's trying to regain that support again. But I look for those breakdowns below support. is key. And then if you use the inspect tool and you click and hold and then drag lower, this is going to help you set your stop. Over here, you can see in gray, it tells you the percentage change. So what I'm looking for if I'm doing a short is what is my downside potential? So this one, there is about an 11 to 12% downside potential if it were to break down at this level. It's a little hard to tell, and this one was requested as a long. So I could talk more about that, but did we have any more questions?
When do you think TLT will turn around? I think I addressed that. TLT is basically, I think, turning now down. I don't know which turnaround Jim was looking for, but that's what I would say. I think it's headed down now. So,
yeah, here's the weekly chart. So the weekly chart, the weekly PMO looks pretty good, but you know, I'm with you that those interest rates are finally getting ready to turn. I have just been waiting and chomping at the bit because we've talked about this one quite a bit, but looking at the interest rate hedge ETF, this one basically follows the, I think it's the 10-year yield that it's pretty close to. But when interest rates rise, this ETF will rise. So we lost support, but we're holding support now at that 200-day EMA. If that turn happens on interest rates, which I think it will, plenty of upside potential here. I mean, to get to this top we had back here is a 25% gain. And I think that that's perfectly doable. It's just a little bit early. We don't really have the confirmation yet from the PMO that we're going to get that turn.
Okay. Curious about Carl's view on oil demand. As an aside, how can one really get a handle on what oil will do without knowing the COVID pressure in China? How do you get real info on COVID in China? I can't even go that far. I mean, it's basically my idea of demand for oil is that we're entering winter, and the world is going to need more oil to heat homes and factories, etc. That's basically I see that as just obvious demand, but it's, you know, what is obvious doesn't always happen. So that's why we use the chart.
Yes, the chart is really key because you know, at least I believe, and I think you do, Dad, is the fact that really most everything's baked in. You know, a lot of the stuff everybody's already taking into account. Everybody's expecting, you know, oil to rise because of the winter. You know, that's going to be baked into the chart. And even with that, we're still seeing that declining trend. You know, you mentioned COVID and China and the Middle East. I mean, or with China, the problem is we don't even know that the data coming out of there is true. There's not really any way to verify. So trying to trade off of what might be going there isn't going to work for you. But I still see oil in a decline. It's holding support, but I really see it breaking down from there, even though it intuitively would make sense that it would go up in the winter. But look at stochastics, PMO flat. We'll see. But at this point, I'm not too optimistic.
Okay. Do you think presidential market cycle is meaningful? And if so, what would this year portend? We don't follow this. I know I get Tom McClellan's letter. He follows it, and it seems to be useful, but it's one of those things that as soon as you bet on it, it's not going to work for you. You know, it's the way I look at it. It's
right.
Somewhat, it's a lot like sentiment.
Yeah, exactly. Not necessarily. I find it interesting, but not tradable. And I apologize. This was a test question for the CMT, and I used to know exactly what all of those cycles meant, but I can't remember offhand.
Okay, NASDAQ is below the 200 weekly average.
Yes.
This is the first time since 2008. Are we going to crash? Uh, I certainly, I've never used the 200 weekly average.
Here's the NASDAQ. We'll make a weekly. And then I'm going to add that 200 week EMA. There's the pink line is a 200. This is the EMA. So you're saying, it looks like you're using a simple moving average. So let's go ahead and update that really quick.
Whoa.
Well, even with that.
That's not a 200.
Oh, I was going to say that doesn't make sense. There we go.
It's still kind of the same.
Yeah.
Yes. I mean, the crash is extreme. But I think we're going lower for sure. I mean, that's just the way I feel about it. Just an opinion.
Yeah. I mean, the next support level would be the 2020 highs, but that's kind of the only part of it that's support. You can see a little bit of support there where it bounced. But past that, you're looking at these tops. That's 8,100, 8,000 for the NASDAQ composite. I can think you could use the nomenclature crash if it goes down to 8,000, which is another 25%. Yeah, we're not feeling too good about what's going on here.
Okay. Let's see. I think someone wants to know what the PMO is. You can find the definition in the chart school.
Or right over here on our website, we have plenty of free material here, but you'll also notice under the educational portion. If I can.
Oh yeah, there's the PMOs over there too. You can read about that, but it's a moving average of a moving average of a 1 day rate of change.
Yeah, basically.
That's essentially what it is. Yeah.
Yep. You'll see also that it's in the formula's in there if you wanted to get crazy.
Okay. You need to do a couple of symbols here.
Oh my goodness, yes.
EWZ.
Okay. All right. We were looking at that. It's not a shorting candidate because it is sitting on this support zone level here. But the PMO is still in decline. And I will just say right out the gate, if the PMO is in decline, it's not something I would want. So this is not something I would want. But you can see that stochastics maybe are getting ready to turn up, but RSI negative. I don't see a lot of merit here to go long on EWZ.
Okay, Zip long wants to know if Zip is a good long candidate.
All right. This is in the software space. Software, you can see, is starting to lose relative strength against a weak market. So that right out the gate is, again, going to tell me I'm not really excited to expand my exposure there. But, if we're going strictly by the indicators, RSI positive, PMO rising, but also notice the PMO has been very, very flat as price has been in this big trading range. I see it continuing in that trading range, and stochastics is suggesting it will continue in that trading range. Yes, it is outperforming, but
take a look at the weekly. There's not much there, but
no, unfortunately not.
No, I would say no.
No, but that big declining trend has not been broken. If we find something that looks pretty good, I need to talk about the 5-minute chart because I haven't done that yet.
BAC.
BAC, banking. So I don't know that I'm going to like this either. Again, PMO decline, certainly relative strength. If the PMO were turning up, I'd feel a lot better about this one. It does have kind of a falling wedge look to it. But other than relative strength, there's really not anything telling me that this is going to be a solid bottom. I mean, it's not even lining up with tops or bottoms back here. So I think that this is, while it is a bottom now, I don't know that that's going to hold because you're really where you want to look for the reversal is down in here. So like I said, you could trade on relative strength alone here, but I don't see anything in the indicators to support doing that.
CTRA.
And this is in energy, yes. Again, we looked at USO. I've talked about my negativity toward energy. At this point, again, remember we looked in all of those groups and none of them looked positive. So again, you're fishing in a kind of a polluted pond, if you will, in a very weak sector. But you can see it is sitting on this support level in this support zone. So it's in a place where you could get a reversal, but I mean, stochastics topped well below 20. I mean, I don't see any merit here.
SMH, did you already do that?
I did not, but this is the semiconductors and you did talk about them. Semiconductors look like a short. Honestly, this is the kind of thing I'm looking for. We have this tight pattern, filled black candlestick, and then the breakdown below this support level. It's still holding the 50. It looks like 209.31. It's on the 50-day EMA right now. So it is probably going to close below that and the support level. And PMO headed lower, stochastics below 20 here. If anything, SMH is a shorting candidate. I don't really see it as a long.
Okay, EMR.
All righty. There is another tight trading range. It is near the bottom of it. So getting to the top of it, I think, is a possibility here. But we're talking about a 1.5 to 4%, 2 to 4% gain on a risk of stop of at least 3%. So, I mean, it's not a horrible risk reward, but I like double my stop level as my upside target. And I don't see that here.
PMO's falling.
Yep, PMO's falling. So RSI is positive. So there are a few things, but stochastics, these are very sensitive. I love stochastics. That's why I added them to my chart, because they are so sensitive and they give us a really, they're usually a good early warning system and a confirmation system. And right now they're confirming this decline in the PMO and the possible breakdown here rather than a breakout.
Lilly.
All right, pharma. Healthcare has been one of the better places to be, but boy, Dad, I don't know. That's pretty much a rounded top.
Yeah.
PMO in decline, not oversold. RSI negative, stochastics moving lower and below 20. And again, we have some nice outperformance here by pharmaceuticals. But what has that meant for Lilly? Really nothing, because down here, it was probably, let's give it the benefit of the doubt, it was back here. But right now we're trading, just 2% above that. I mean, I don't like it. I'm sorry, guys. Everything you're going to throw at me, I'm probably going to say, nope.
Yeah, I hate it. Honeywell, HON.
And I do see a short in here that I'll have to look at before we go, for sure. We started about 1 minute late, so we'll get a little bit more. Rounded top, PMO in decline. Not really a short candidate to me because it's still holding above strong support. PMO, again, in decline, guys. You really don't want to be there. Your chances of it falling further is a lot higher than your chances of it turning up when momentum is negative. So no, on Honeywell. I do see a short for hog. So let's do a quick one on that. All right. So this is a shorting candidate, right? So we've got the big rounded top, check. Negative RSI, falling PMO, falling stochastics below 20. Check, check, and check. Relative strength isn't great against the S&P. That's kind of a problem for me because, with the market weak, you're taking a big chance here. But you do have I guess on a short, you're not taking much of a chance. Nice breakdown here. I could see this as a short, but you just have to be a little careful here because your resistance is going to arrive in about 3 to 3.5%. And that could end up being a reversal area. I doubt it, but it could end up being a reversal area. The next level of support's way down here. So I think this is a pretty good shorting candidate. And given that we only have about 1 minute apologize for those of you we didn't get to your symbol request, but I wanted to look at a 5-minute candle. This is how we time our
2.5 minutes. 2.5.
Okay. You want to time your entries and exits using a 5-minute candle if you can. Buy points are PMO crossover and a positive RSI. So with a negative RSI all day today, there was no buy point, but we're looking at this as a short. For me, when I want to go to this chart and sell, I'm just looking for negative momentum. Currently, the momentum is positive. So this wouldn't be the place that I would pop in for my short, because we might get a little more upside here and it'll offer me a better entry that way. So that's kind of your entries and exits there. So let's go ahead and get to the next one.
IBM.
Ooh, pretty ugly. Below support levels here. I guess it's kind of holding this one. But again, really negative indicators. I would expect this one to continue lower. This is a short candidate for real. There's your support level here for the gap support, but really the strongest support doesn't come into play until this top here and these lows. So that's offering a pretty good short of about 9–10% to the downside.
Okay, how about looking at the weekly on the IBM?
Yes.
We've got just under a minute.
Okay. There we go. Topping PMO on the weekly chart. Drop in the StockCharts technical rank. Weekly RSI is positive, but boy, this doesn't look like you're going to get a bounce here. I don't see it.
Nope. Okay, and let's see. How about, let's see, BA.
BAC. This is Boeing. All right. Probably a rising wedge. Probably draw that in really quick here. Looks like a rising trend channel, maybe.
I would say a rising flag formation, and that's terrible. We got 2 seconds.
Yes, exactly. Rising flags on a flagpole generally fail. So that's just a quick lesson right there. When you're looking at flag formations, you want them to be like this: flag, downward flag. That's what you're looking for. All right. I know with symbol requests, I think, are still coming in, but we have to close out the show right now. Thank you for joining us. Remember that we are raising our prices in January. So you really do want to, if you've ever thought of getting a DecisionPoint.com subscription, now is the time so you can lock in your rates. Do not worry, you can cancel at any time, finish your month. So we're really generous with, making sure that if you cancel on time. There's, customer service is great, because customer service is me. All right, that's all we have. And Carl and I wish you good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.